Welcome to Supernova Stock Watch. We are looking at a value stock with over a 29% annual dividend yield. Investors might want to take a chance on Golden Ocean Group Limited, ticker GOGL, upgraded to a strong buy. What makes it a strong buy? The rating change is due to an anticipated increase in earnings estimates and can be seen as one of the most potent forces impacting stock prices. A company's changing earnings are at the core of its rating. The system tracks the consensus estimate for earnings, measured by those covering them on the sell side for this year and next year. Rating a stock is helpful to make your investment decisions. It tells you the conditions people use to judge the stock, the overall financial health of the company, and buy sell prices for company stocks. They might find it challenging to make decisions based on rating upgrades by Wall Street analysts, as these are driven mainly by subjective factors that are hard to see and measure in real time. The analyst upgraded its rating for Golden Ocean Group, which reflects positivity about the company's future earnings outlook and a potentially higher stock price. The change in an organization's potential earnings capacity, as quantified by revisions to its future earnings estimates, correlates brightly with the near-term price movements of its stock. One contributing factor to this relationship is that institutional investors use earnings and earnings estimates to calculate companies' fair value, contributing to these correlations. An increased earnings estimate will result in a higher fair value, and, typically, investors buy more. Based on decreased earnings estimates, selling will lead to a lower fair value, and other investors will likely buy. Such transactions affect the price of stocks. Fundamentally speaking, the rise in earnings estimates and a credit rating upgrade for Golden Ocean Group imply an improved business trend. Investors should show their appreciation by pushing Golden Ocean Group's share value higher. Analysts have steadily been raising their predictions for the Golden Ocean Group. For the past 3 months, the consensus estimate for the company increased by 5.4%. Who is Golden Ocean Group Limited? Golden Ocean Group Limited, or Golden Ocean, is a leading international dry bulk shipping company founded in 1996 and based in Bermuda. Golden Ocean mainly operates in the Capesize, Panamax, and Supramax segments. The company owns and controls a fleet of 92 vessels, including vessels chartered on long-term time charter contracts. Golden Ocean provides customers with flexible and reliable transportation services, and develops strong industry relations with partners and customers. The company reported a net income of $203.8 million, and earnings per share of $1.02 for the fourth quarter of 2021, the best in the history of the company. They also reported tariff rates for their Capesize and Panamax vessels of $39,304 per day, and $29,635 per day, respectively, in the fourth quarter of 2021. What is a tariff rate? The time charter equivalent, tariff rate, is a standard shipping industry performance measure, used primarily to compare period-to-period changes in a shipping company's performance, despite changes in the mix of charter types, i.e., spot charters, time charters, and bareboat charters, under which the vessels may be employed. They announced a dividend of 90 cents per share for the fourth quarter of 2021. Fleet inefficiencies, amid continued healthy demand across most commodity groups, supported a robust rate environment. They continue to see expectations for continued healthy GDP growth through at least 2023, supporting expectations for strong dry bulk markets for years to come. Their order book is likely to stay muted due to limited slot availability before 2024, increasing prices, limited availability of financing, and new emissions regulations. Fleet utilization is forecast to increase, supporting a solid freight rate environment. Significant cash flow was secured in the first half of the year. This effectively built a bridge into the second half of the year, which is expected to be much stronger. They've achieved through well-timed acquisitions, a modern, attractive fleet, and access to competitive financing. This provides significant earnings potential with a modern on-the-water fleet comprised almost exclusively of Capesize and Panamax vessels. Bottom line, the company Golden Ocean's annual dividend yield is much higher than the S&P 500's. At roughly 30%, its dividend payout ratio is over 130%, providing a 5-year annualized dividend growth rate of more than 36%. They have increased their dividend 8 times in the past 5 years. The annual free cash flow increased by 47% from 2020 to 2021, and has been continuously rising each year since 2019. The free cash flow margin decreased from 2020 to 2021 but is slightly higher than the previous year. Free cash flow per share increased steadily over the past 12 months. Golden Ocean shares have been performing great over the past 12 months, with a close to 100% return, and outperforming the S&P 500. The story has been the same. Their shares have vastly exceeded the S&P 500's return, and have increased almost 40%. Golden Ocean is currently a Zacks ranked number 1, strong buy, and has an overall VGM score of a B. Looking at tipranks.com, they have it as a moderate buy with a 41.87% upside. Let me know what you think in the comments: buy, hold, or sell? I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. You have made it to the end of my video. Thank you for watching. Please check out my other videos and the description for great deals and sign-up bonuses.